Good morning. It's April 19th. Ron and I are here to discuss several topics with you. I have a license agreement with Ron to utilize his materials, and the agreement requires me to share this notice with you. I do have his written permission to utilize these products in this manner. Here's our standard disclaimer, which protects you as well as us. And the information that we present today is for educational and informational purposes only and should not be construed as advice. You and you alone are responsible for how you evaluate and utilize the information that you learned today. So our agenda is to, again, talk about the current vision status. Then we'll move into the market forecast. And then we've got the information on our new service that we'll be covering at the end of the session today. So the current version is H. It was updated March 22nd. It improved the fundamental option and chart data issues. We are testing a beta version, which we're calling HH. It fixes some of the bad symbol messages that users are seeing when doing a fundamental search or using Stock Explorer. If you're having any kinds of problems running Visions, make sure you're using H and that you've implemented the Windows 10 support notice. Visions operates best when run in an administrative mode. And then Ron's planning to, once we hear that everybody who's been having problems has been fixed, then we'll take the HH version and then we'll roll that out as a new version I. And I will send out an email when that's available for download and installation.
The HH solved the problem.
Yes, two of our beta testers for HH are on the call today. So if anybody else is having problems, let us know. All right, Ron, you've got the update.
Here we go. The roller coaster ride. So where did we start? 2025, we said interest rates flat. Well, they're still flat. Powell has done nothing. Unemployment rate up. It's up a little bit. There are, a lot of job opportunities, but the employment rate has ticked up a very small amount. So up is still a good factor. Price of oil is down, which is true. In fact, it almost went below, I believe, $60 a barrel here a couple of times. So maybe that's a stabilization point going forward. So down is, is probably, a good factor we're using here. GDP growth rate flat, but he's saying we might even go into a recession, but got to wait and see what this whole tariff thing does. The US dollar stronger, the first year of a presidential term. Consumer sentiment flat, might be moving down. People are nervous about the tariff thing. We don't know yet what the impact's going to be. So we'll see down the road. And then Cedric chart, C to A to B. So that forecast, those settings produce this forecast for 2025. And the black line here is the actual. The blue line is our forecast. And we did forecast a big drop, but the market, went down a lot further. So it has a time to catch up here. Will the actual get back closer to the blue line? Very possible. I think as we work through all of these tariff issues, this could change drastically in the next 3-4 months. So the forecast says we're gonna continually move up to the rest of the year. So we'll see where we go actual wise. So I think our factors are still good. So there's still good opportunity in 2025. And now let's look at Outlook. Outlook is the next basically 90 days of where the market might go. And what Outlook is saying is, yes, we're going to stabilize here, jump up a little bit there before the beginning of June, and then a drop back down to where we're really at right now. So this is probably all related to what's happened in the past here with this whole tariff thing to cause, this big drop, take a while to recover. The forecast says we will recover, just going to take some time.
Okay. Questions?
Questions? So the motto is we're going to watch things, be conservative. You'll note it that we said no trade alerts because the system didn't give us any opportunities. When the market dropped the way it did, as you know, to get a buy signal, we have to see a couple up days. And we did get one up day maybe, and then 2 down days. And that knocks that the gold score way down till it recovers. So that's why there are really no opportunities until we get through this period of time where the market has, kind of settled down. And, in the meantime, we want to be very cautious. We don't want to, get into something and have it drop $2 or $3, overnight, or because of, the news regarding tariffs. So I know it's difficult sometimes to sit and wait, but it's probably better to wait than to be sorry later on. So that's kind of the reason why we're, kind of in a pause until we get better visibility. If you look at that outlook there, it says, the market's not going to have another, a couple thousand point, drop on the Dow, but it's going to be pretty choppy. And that's all driven by this whole tariff thing.
I know in the past you and Tommy have discussed strategies to handle this, one of which was working with the bear ETFs like TZA or SPXS. And is that a strategy now that might be good in the interim? Or is that still risky in your opinion?
Well, when we ran the black box last night, or actually yesterday, it did turn up a couple of the inverse as being in good positions for entry points. One of which was the semiconductors. That was still showing weakness, but we haven't seen, and the other one was the NASDAQ down, which is SQQQ. So those came up, but when Ron and I were looking at things, it looks like the market's kind of stabilizing. There's a lot of volatility in individual equities as well as these ETFs. So we thought that we'd take, and you'll see the trade alert come out later today. We thought that we would use the volatility to be able to go deep in the money. So we're going in deep in the money, 2 strikes on one equity, 3 strikes on the other one, and staying with opportunities that we still see in the marketplace. So I'm not playing the inverses just yet. I don't know about Ron. And for our naked put, we did not, going into this, if you go back, we were using TZA quite a bit. And then we got caught on and TZN, we've been bouncing back and forth between those for the naked puts, but there's opportunities there. It's just got to be what your research, yields yourself due diligence wise to where to go.
Right. And to realize that during, when there's such, I'll call it volatility, it does produce larger option premium. So might say, well, I'll just go right at the money, and then it drops down on you. So, if you can go in the money far enough down, on a call, get called out, but you can make 1%, you probably can, have a pretty good strategy of taking at least some return to the bank. If you try to get greedy, you could get caught. Okay. This is
Mm.
always this thing, risk reward. You don't know what the market's going to do in this period. But we found, those equities that have large premiums, and it's because of the volatility that's generating the premium. So we're taking that to go deep in the money on the calls.
Yeah, like when we looked, normally one strike in the money, we were, like Ron was saying, we were seeing returns like 2.25%. And these are diamond options, so you're sitting there saying, okay, it's a diamond. You're going to make the magic chart, whether it expires or gets assigned. But, if the market were to turn on those individuals, then you've got a period of time where you're going to have to work your way out. Premium's there, but premium can disappear pretty quick too. So our strategy has always been to try to generate about 1% in a week. And so, as Ron said, we're just going to stay conservative, and we're going to, just how far down can we go in the money and still make that 1%? So that's our strategy, as opposed to trying to flip over and play the inverse.
Gotcha. Okay.
Other questions?
I guess that those equities in which we are underwater, I believe we'll have to wait to see, the strategy to force negotiations really pay off. As far as tariff is concerned, we'll see if some of these countries will come in and negotiate.
Give me just a second here. I want to share my screen again. Kind of go back to the question that Dave, you were asking. So this is the tool that Ron and I are working on. I really wasn't going to preview it today, but it is something that we had talked about somewhat last month, and I told you we were developing it. So this is Outlook, and there's Outlook for the SQQQ. And so you could see here, if I get it back, you see here that it is kind of, it's got a slight uptrend. And remember, we saw that the market from a forecast standpoint was going to have a run up in June. So you would expect to see the SQQQs to come down. So if you were to go into SQQQ, you've got to be mindful, if you're not out within the week, by the end of the month, then you could be facing a long time to try to recover from that. And then this, so here's our input factors with the input factors for 2005 NASDAQ. So you're looking at, this is what the NASDAQ would be. Granted, again, the tariffs have impacted a lot, but even here you're seeing a relative flatness. So if you were to play in a flat environment, would you want to play the downside or would you want to play the upside? Well, if you look down the road, it looks like there's more upside than downside. So that's part of that due diligence process, I think, that you would want to go through. And in response to a question asked a month ago, we were talking about only having the forecast for the S&P. You can see now that we've built a tool that actually provides the forecast using the same AI by Monty. So the S&P 500, like it forecast almost a 22% increase and the Dow about 18%, and the NASDAQ almost 20%. So, and then we compared those just to make sure the relevance of what we were looking at. It looks like, and I would say we're seeing that the NASDAQ is underperforming the S&P 500. It's tech stocks are definitely having a problem. And when you look at what this forecast is built on January 1st. So who would have known? Who'd have known, you know? But yeah, it was forecasting that the NASDAQ would have a tough time here in the second quarter, and then would catch up and actually move ahead of the Dow by the end of the year. So, and of course, then these are all changeable, like we were talking about. So if we were to say, like Ron, you were mentioning, just to play with it a little bit, if we were to go down, consumer sentiment down, and let's say that the dollar is flat, not getting as strong, we can generate that forecast. And you can see then not much change, but still some. Yeah, so that was 21.65 reset. See if the buttons all work, reset the default. See, it's not much of a change, just in those two factors. Okay. So yeah, we're listening to things that y'all are suggesting, and we're working towards that way. So the tool that you just saw has outlook for the entire S&P 500 right now. And we're working towards adding the Visions chart to that tool, and hopefully should have that up and running by the end of by our next meeting. And then next meeting we'll preview those a little bit more, but certainly trying to work towards a web version of the charts and everything at this point. Okay.
Thank you.
Good job, Tommy.
Good job, Ron. Okay, let's get back to the. So with that, it brings us to talking about the MTV AID snapshot. We've talked a little bit about this last couple of meetings. We're at the point now we're ready to roll it out. Let's be honest with each other. Even experienced traders feel this. Markets move fast, and when the opening bell rings, you don't always have time to fire up Visions, run your scans, filter through the setups, and make sense of everything that's there in front of you. Some days you just want to jumpstart something to point you in the right direction before the opportunity passes, and that's where this new tool comes in. We're introducing MTV AID Snapshot, a service designed specifically for traders who already believe in the power of Visions, but want speed and simplicity. At 10 a.m. every Eastern time, every trading day, we scan the market using the same black box algorithm that powers Visions. It's a list that has 5 equities that have multi-day options. In other words, if they don't have daily options, then they've got like Monday, Wednesday, and Friday options. There's 126 equities that have weekly options. And then there's 64 in this list that have monthly expirations. So it's a list of a combination of a lot of different option expirations. And when it comes to price, we didn't put a limit on price like we do the trade alert. We'll send you a short focused email with these handpicked stocks and ETFs that are flashing the buy or hold buy signals, so you don't have to run anything yourself. The email that we send out is very clean. There's no fluff in it. It's just the essentials. You get the ticker, the company name, the current price, and the signal. We organized it by signal type first and then alphabetically. So you can quickly scan it, even looking at your phone. I've got an example of the email in the next slide, and we'll go through that. Now, this isn't some just generic bulk list. Most days you'll get, we've been tracking it. We've seen as few as 2 opportunities and as many as 20. So these are, it varies day by day, real-time setups that you can act on that morning in the market. This is exactly what a subscriber to the MTV AID snapshot receives. It's simple. It's focused email delivered shortly after 10 a.m. When the scan is done every trading day. This is the example from last Thursday. You can see that we had 1 buy signal at the top, SOX S. And then we had a strong group of hold buy opportunities right after it. The list is sorted by the signal type, then alphabetically, as you see. We also include the sell signals, whether it's a sell on gain or a sell on loss. In this case, NVIDIA had pulled back the last couple of days, Wednesday and Thursday, and actually had triggered the sell on loss point. And so you'll see those. Following that list, you'll see we've got a quick summary here, the buy and the whole buy ticker list. That way you can copy those and paste that straight into Visions if you want to then go from there and set it up into a trade planner, or if you want to get the graphs and look at them, you can do that. Or if you're just reading it on your phone, it's an easy way to get just a quick list of what those equities are that are in a buy or a whole buy. And it's not really overwhelming you with data. It's just about giving you a snapshot of the real-time opportunities. Recognize that the market can change through the course of the day. We've seen cases where there's been a buy in the morning and then the price came back and dropped some, and then by the end of the day it wasn't a buy. So just recognize that this is a snapshot at 10 o'clock as to what's taking place in the market. Vastly different than what we do with the trade alert, where we're looking at the market close. In this case, we're looking at what the market is in the morning, 10 o'clock. It's not a replacement for Visions. We view it as an extension to it. It's another tool, another way to use the algorithms that Visions utilizes. It's a way to apply the strategy that you already know and trust without needing to sit down and run the software each morning yourself, waiting for it to do that. We run it for you. It helps you by you spending less time in preparing, more time for you to focus on the execution and the strategy. And it's the same decision-making power you've already built into your trading plan. You get to decide what it is that you want to do. So what we're going to do is charge $100 a month for this. It's a, in a course of a month, you're going to have 20 different runs of the program. So there'll be ample opportunities for you to be able to recoup that cost. But for you as current subscribers to either our Trade Alert or combos, we're going to offer that at a reduced price of $50 a month. To make it easy to try out, we're offering a 10-day free trial. No credit card, no strings. If you don't want to use it after that, just let us know. We'll cancel you. And we built this because we know your time is valuable. And so we're trying to help your mornings go smoother and your strategy be even sharper. So if you're interested in a trial, send me an email and we'll get you signed up into the system. The end. Questions? Okay, well, great. I guess, when I used to do presentations like that, if there's no questions, that tells me that I anticipated everything. Or you've overwhelmed and you don't know what to say. Okay.
Well, it's something where you just got to try it and see how it works on the ground.
Yeah.
Right.
But I think it covers a couple of things that people have asked over the years, which is number one, monthly options. Okay, so we're back to being able to provide you with some opportunities that have monthlies, and maybe that's something we ought to do down the road. I mean, there's always enhancements that you can make. I mean, we could break it into these have weekly options, these have monthly options, to where you would know very quickly which equity is in which group. That's the beauty of being able to
I think that would be useful.
Yeah. Okay. So then we're able to look at those things. And Ron and I built this based on fundamentals. And so we took a very conservative approach on the fundamentals. But if there's particular equities that you'd like to see added, we're open to that. Again, I mean, we could even make that a subgroup, which is user submitted equities. So then Bob, you'd be, I don't know that I'm going to put Bob's entire list of 150 equities that you're scanning, but certainly, the ones that y'all are frequently using or wanting to watch and see how does it evolve through the buy, the hold, the sell, the wait, and the buy. We're open to that discussion. Right, Ron?
That's right.
The reality of it is, I'm an independent. I go through everything at the end of the day and decide what, if anything, I want to do the next morning. I am not a weekly. I have some options that are weeklies, but in general, I go out 3 or 4 weeks. I want a higher premium, and I want to work with the stocks that I'm confident with.
I've talked with.
Have I recently got bit on the butt having some stocks put to me? Sure I have. But they're stocks I don't mind owning that I've owned before, and I'm still working with them and do just fine doing it that way.
Yeah.
I've been doing this forever is the problem. Too many birthdays.
Right, Bob.
My father-in-law would say.
Well, I've been retired 20 years, so I can't complain.
It's great. Great.
And I haven't missed that business one damn day since I sold it.
Right. Okay. Any other questions, comments?
Paper industry. Anybody that watches IP and some of these other major paper companies, IP is closing down a lot of their local recycling operations where they pick up material. And a lot of the mills are only running part-time because they have no demand for orders.
Hard to believe with Amazon shipping so much stuff in paper bags and boxes.
But see, that's cut down the demand for corrugated. But the other reality is they're not getting the orders for finished packaging from manufacturing companies. And that tells you that that's a good indicator that that part of the economy has slowed down. The manufacturing end.
Yeah.
I mean, my first impression is that this is going to be very useful to me. It's going to cover a lot of time in research and more into execution. So, I'm going to try it, obviously. I see a lot of benefit into it.
I'm going to put Dave Schultz on the spot and lay a card out. So Dave helped us as Ron and I were developing it and going through the process. So Dave's had the benefit of seeing And the list has changed, Dave, between what you were looking at and what we've rolled out now. We had a smaller subset that you were helping us test, but now we're rolling it out to a larger list of equities. But Dave, any insights what you saw over the weeks that you were watching these and giving us feedback?
Yes, I found it very helpful in several ways. First of all, to sort of validate what we were getting on Saturdays. It was a big help to look at that and then go, okay, how does this compare to what came out Saturday? And then the follow-up on that is sometimes I wasn't able to get to my computer right away and do the trades. And by the time I started doing that, the premiums had kind of dried up on the recommendations from Saturday. And it was very helpful to use that list to run it through Visions and then decide on a buy that gave a premium that I was looking for from that list. And it's actually worked out quite well. And as a standalone too, just to look at it and say, all right, what does this look? And I was basically copying and pasting it into the Visions and then running it through and using it as a standalone to decide whether or not I wanted to take action on some of those. And I would say for the most part, it's worked out very well as far as the suggestions. And I found it very useful.
Okay. Thanks for the
Thank you,
testimony.
Dave.
And I think even at $100, it's a bargain. in my mind.
Yeah, well, it'll only be 50 for y'all because you
Right.
obviously subscribed to something else. So,
Right.
okay.
All right.
Yep.